As of right now, Wednesday, April 22, 2026, BigBear.ai, trading under the ticker symbol BBAI, is sitting at a live intraday price of $3.89. We are seeing a steady climb today with a gain of 1.3% as the market processes a series of leadership changes and a critical earnings date announcement. While many retail investors are looking at that price and seeing a small-cap software play struggling to find its footing, the reality beneath the surface is far more complex. Most people expect BigBear.ai to just be another speculative AI name that rides the coattails of Nvidia stock or gets lost in the shadow of Palantir. But what if I told you that the real story here isn't about the software at all, but about a massive balance sheet restructuring that has quietly wiped away 90% of their debt in the last year? That is a fundamental shift that hasn't fully baked into the price yet, and it's the kind of detail that separates a casual observer from a serious analyst. The expectation from the broader market has been one of skepticism, largely because BBAI has seen its shares trend downward by over 50% in the last 6 months. Investors on platforms like the Robinhood app or those managing their own individual brokerage accounts often see that kind of red and head for the exits. They expect a company that is burning cash and losing contracts. The reality, however, is that BigBear.ai is currently in the strongest financial position in its history, holding over $460 million in cash and investments. This liquidity gives them a massive war chest to compete in the national security space, which is a detail often missed by those who just glance at a ticker on a Fidelity mobile app. When we look at the recent daily swings, the volume today has been relatively light at about 148,000 shares, but the institutional activity tells a much more aggressive story. We are seeing significant inflows from major players. Just yesterday, Fiduciary Alliance LLC reported a 15% increase in their holdings, and earlier this year, we saw massive position builds from the likes of State Street Corp and Van Eck. These aren't just retail traders on a Robinhood stock trading account. These are heavy hitters positioning themselves before the first quarter earnings release on May 5th. Institutional buyers have poured over $500 million into this stock over the last 12 months. If you're using online investing tools or a SoFi active investing platform, you need to be watching these 13F filings because they show that while the price is suppressed, the smart money is actually accumulating. Comment below how many shares of BigBear.ai you currently hold, or if you're looking at other defense tech like Palantir instead. The momentum in the sector is also playing a huge role here. While names like Apple stock or Tesla stock dominate the headlines, the defense-focused AI sector is seeing a massive influx of government spending. BigBear.ai just appointed a new Chief Human Resources Officer and a Chief Corporate Affairs Officer, Joanne Bjornson and Alex Thompson, both of whom have deep roots in federal contracting and global communications. This isn't just corporate fluff, it's a strategic signal that they are gearing up for a major push into the Department of Defense's massive budget for 2026. The expectation is that they are a small player, but the reality is they are becoming a highly specialized, mission-ready partner for national security. Let's break down the actual business model for a second, because that's where the disconnect usually happens. BigBear.ai isn't trying to be a general-purpose AI. They focus on mission-ready AI for national security and global trade. They recently closed the acquisition of CargoSeer, which expands their footprint into supply chain and border security analytics. This is a very specific niche. Unlike the broad reach of a Fidelity wealth management portfolio that might hold diversified Fidelity ETFs, an investment in BBAI is a concentrated bet on the intersection of AI and federal intelligence. They project their 2026 revenue to be between $135 million and $165 million, which would be a 17% growth rate. For a company that was recently facing massive debt obligations, that kind of projected growth is a significant turnaround. If you look back at their past performance, 2025 was a year of cleaning house. They settled their 2029 notes and integrated Ask Sage, a generative AI platform for defense. The stock price today reflects the pain of that transition, a period where revenue actually decreased due to lower volume on Army programs. But that's the past reality that the market is still stuck on. The future reality involves a company with a clean balance sheet and a specialized product suite that is now being cross-sold to existing government clients. This is the tension that creates opportunity. If the market expects a failure and the company delivers even a modest success, the upside can be violent. For those using an interactive brokers platform or a SoFi trading platform, the technicals are starting to look interesting. We're seeing a 52-week low of $2.36 and a high of $9.39. At $3.89, we are much closer to the floor than the ceiling. This creates a risk-reward profile that is attractive to those who practice self-investing. However, the risks are real. Revenue concentration is a massive hurdle. If they lose a single large government contract, the stock could easily revisit those lows. Furthermore, they are still reporting a net loss per share, which was 82 cents in 2025 and is expected to be around 30 cents this year. While that is a massive improvement, it's still not a profitable company. Comparing this to the giants like Nvidia stock is a mistake. Nvidia provides the picks and shovels, the hardware, while BigBear.ai is trying to build the specific logic for a very picky customer, the US government. When you use an online investment tool like Schwab Intelligent Portfolios or explore investing sites for advice, you'll often see BBAI lumped in with speculative tech.
That's the common ground, but the deeper take is that this is a special situations play. It's a company that has survived a near-death experience with debt and is now emerging with a massive cash pile. They have enough cash to fund operations for years without needing to dilute shareholders again, which is a rare thing for a sub-$5 stock in this space. Looking forward, the catalysts are clear. The May 5th earnings call is the next big hurdle. If they can show that the integration of CargoSeer and Ask Sage is already contributing to the top line, we could see a squeeze. Institutional ownership is currently around 7.5%, which is relatively low for a tech company, meaning there is plenty of room for more big money to enter if the narrative shifts. If you're using a Fidelity brokerage or a Robinhood app, you are seeing the retail side of this, but the real movement will come when these institutional inflows move from $500 million to $1 billion. In terms of macroeconomic pressure, the high interest rate environment has been a headwind for small cap tech, but BigBear.ai has neutralized much of that by paying down their debt. They are no longer as sensitive to the Fed's decisions as they were 18 months ago. This is another area where expectation versus reality plays out. The market expects all small caps to suffer in a higher for longer rate environment, but a company with $500 million in cash is actually earning interest on that capital rather than paying it out to bondholders. This is a subtle shift that changes the entire valuation model. The competitive landscape is also tightening. They are facing off against Booz Allen Hamilton and Palantir. These are the Goliaths of the industry. The expectation is that BBAI will be crushed. The reality is that the government often prefers to have multiple vendors to avoid being locked into a single ecosystem. By being a specialized provider, BigBear.ai can win task orders that might be too small for a giant like Palantir, but are highly profitable for a smaller, leaner organization. This niche winner strategy is exactly what they are signaling with their recent acquisitions and leadership changes. To wrap this up, the central insight here is the massive delta between how the stock is perceived as a struggling, debt-ridden AI penny stock and what the filings actually show. A cashed-up, debt-free, specialized defense contractor with a 17% growth target. The expectations are low, but the reality is looking increasingly solid. We've seen a lot of volatility, but the institutional accumulation and the clean balance sheet suggest that the floor is becoming much firmer. As you manage your online investing or look through your SoFi ETFs and Fidelity IRAs, remember that the most profitable moves often happen when the market is looking at the rearview mirror, while the company is already halfway down the next highway. We have established that the expectations of failure are being challenged by a reality of fiscal discipline and strategic expansion. The authority of this analysis rests on the numbers: 90% debt reduction and $460 million in liquidity. That is the story that matters most for BBAI right now. Keep a close eye on that May 5th date. It could be the moment where expectation and reality finally collide for the broader market. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video. Comment your thoughts. Share with your friends. Subscribe for more updates.